Today we're going to destroy some bullshit myths you've read online about how digital nomads are taxed when they're living around the world. So my name is Bobby Casey. I am the founder of businessanywhere.io. So let's dig in. So first of all, you need to understand there are 4 basic different types of tax systems in the world when it comes to the way countries treat their residents as tax residents. So just a precursor to that, I want to say there are technically 2 different types of residencies. The first type of residency is what we call physical residency. That is the residency that gives you the right to reside in a particular country. That's handled by the migration office of that particular country. So for example, if you have a digital nomad visa, or if you have a residence permit, or you have a work visa, or that type of thing, those are granted by the migration office, and you have to meet a certain set of requirements in order to have the rights to reside in that country. That's your physical residency. Your tax residency is something completely different, and it's handled by the tax office of the country. That is what it means to be a taxpayer in that country. So sometimes you can actually be a tax resident without having physical residency. You can also have physical residency potentially without having tax residency. So you need to keep them separated and understand the difference between physical and tax residency. So moving on, 4 different types of tax systems in the world. There is Tier 1 taxation. That is zero tax. Those are countries like your tax haven countries, like Cayman Islands, BVI, Seychelles, places like that, where they have zero taxation if you're a resident in that country. I mean, those are quite straightforward, quite simple. If you go move to Cayman Islands, you become a tax resident there, you pay zero tax on anything. Okay, there's Tier 2 countries. These are what we call residency-based territorial tax systems. That means if you have legally become a resident in that country, physical resident, or maybe a tax resident in that country, you only pay tax on the income you earn within that territory. There are several Latin American countries that fall into this Tier 2 territorial tax system. Places like Panama, Paraguay, Costa Rica, Nicaragua, and several of your other Latin American countries fall into this category. Tier 2 is mainly what digital nomads and location-independent entrepreneurs want to target for their residency solution in most cases, because sometimes the Tier 1 countries, while it sounds nice on paper, they're difficult to acquire and they're expensive and sometimes very difficult to maintain with minimum stay requirements. Tier 3 countries are residency-based worldwide tax systems. This is the majority of the world. 95% of the countries in the world are Tier 3. They are residency-based worldwide tax, meaning if you're a resident in that country, you pay tax on worldwide income. And then the 4th one is a citizenship-based worldwide taxation. And there are, in practical terms, there's really only 2 countries in the world that do this. That's the United States and Eritrea. And even Eritrea is a much simpler Tier 4 country than the US. So basically, these are your 4 different types of tax systems in the world, your 2 different types of residency. So if you are a digital nomad trying to optimize your taxation while you live this nomadic type lifestyle, you need to think about that both from your home country perspective. Like, are you from Germany? Well, Germany is a Tier 3 country. They are a residency-based worldwide tax system, which means if you're going to become nomadic, you need to exit the German tax system so you no longer have an obligation to the German tax office. Just an example, but if you're from a Tier 3 country, you need to take the necessary steps for your country to exit their tax system if you're no longer going to live there and be a tax resident in that country. Sometimes, once you exit your home country tax system, sometimes it's possible that you might need to get tax residency or physical residency in another country. Now, that's not super common. Most people from most countries can exit their home tax system and not be tax resident anywhere. It is possible. There are lifestyle adjustments that you might need to make, compromises that you might need to make, but it is possible. A lot of people, some of the myths out there are around you have to have tax residency in order to live in this world. That is 100% false. That would only apply really to Americans and Eritreans. Everyone else in the world can give up their tax residency. Now, there are some nuances to that. So For example, using Germans again as an example, you can give up your tax residency, but you have to follow a series of steps in your home country to give up and inform the tax office that you're no longer living there and you're no longer a resident there. And that's pretty simple in Germany, but other countries, for example, Finland has a more complicated system where you are actually, they have a 4-year rule that if you exit, if you leave Finland, you exit, you're still considered a tax resident in Finland for 4 years unless you acquire tax residency in another country. So if you want to exit the Finnish tax system as a Finnish person, you will need to go get tax residency in another country to make that clean break away from Finland. So there are nuances that vary by country. So you have to think about where you're from and what the situation is for exiting in your home country. However, I do want to reiterate, it is possible for almost everyone in the world to exit their home country tax system and give up that home country tax residency, even though there are nuances to do so. Again, really only Americans and Eritreans can't do that. Eritreans have it even easier because if they don't exit, then they just have some limitations. They don't actually have the tax office chasing them around the world like Americans do. So there's a lot of myths out there that give wrong information, like you have to have tax residency or you have to have a place to live or something like that. So sometimes those things can be more difficult. You need to, maybe it makes sense for you to have physical residency in a country like Mexico, for example. We're here today in beautiful Playa del Carmen, Mexico. This is an excellent option to have physical residency. It's actually very difficult to become a tax resident in Mexico. As a foreigner moving here, you can get your temporary or permanent residency without becoming a tax resident because it's actually quite difficult to meet the requirements to become a tax resident. So there are places where you may want physical residency like Mexico or Paraguay or Costa Rica or something like that. And it would make a lot of sense for you for other reasons, but maybe not tax related. So I hope that helps in making some decisions on how to plan your exit from your home country and how to optimize yourself for taxation. If you need help sorting any of this stuff out, you can find on our website, businessanywhere.io, we have a product called our Digital Nomad Kit, where we'll help you from beginning to end sort all this stuff out. You can have direct consultations with me to help figure out the proper business structure for you, how to optimize it, how to sort out your residency situation, whether you need tax residency or physical residency. We can help guide you on that path. The Digital Nomad Kit also includes your company formation, registered agent service, your virtual mailbox service, helping with your bank account openings, your tax filings, your bookkeeping, everything. It's an all-inclusive package. So you can find that on our website below, businessanywhere.io. Have a great day.